Yeah, the market's moving, baby. Market's moving. Very nice. Happy days. Happy fun time. So what's on your mind besides British pound? By the way, I'd like to give the Queen of England a big kiss on the lips. Thank you very much for that British pound today. Very nice of her. Hey, good morning. Welcome to Forex.Today. Yo, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. We do these strategy sessions every single day, Monday through Friday. Well, Monday through Thursdays, we're here at Forex.Today. And every Friday, premium sessions at fxstreet.com, where I'm also Forex Speaker of the Year. Yeah! That's really cool. So what am I doing here? I want to make you a huge success. I want to teach you how to fish with dynamite. But the explosiveness comes from your brain. Cool. So I'm here to share my my many years and probably 1 million hours trading Forex so that you can learn quicker and faster. You don't have to make some of the mistakes that I've made, and you can also learn from some of the successes. How cool is that, huh? So you got 100 pips from the beast thanks to our trade plan yesterday. Cool. I still got one on it. I got 5 on it. No, I only got 1 on it. But anyways, yeah, good job. Anybody else? Hey, 100 pips and you put in your pocket's not a bad morning, right? That was a good use of our hour yesterday. Yeah, Daniel, Bustan, right on. Well, you know, sometimes it's like that, huh? Well, anyways, I thank you for your loyalty. I thank you for being on my team. Thank you for being here every single day. I hope the price of admission is worth it. Oh wait, these sessions are free. But maybe you'll pay it back one day when you're confident and enough in your trading that you'll open up a live account at TradersWay.com. Is that fair? Is that too much to ask? Think of it this way. TradersWay.com is investing into you today up front, into your success. And when you are successful, maybe you'll pay it back. That's a pretty good model, isn't it? Make you successful first, and then have you become a client? Yeah, well, it was my idea. Genius, genius, genius. Hey, let's get going. Boom! Yeah. Genius, genius, genius. All right, let's start with this one. What did we spend like an hour? Not an hour. What did we spend like a half an hour doing yesterday? Seems to me we were setting up a pound-dollar long on the pullback somewhere between the 382 and 618, right? What? Was this the one that had a range? No, I think that was Euro USD. There was a tight range. That was Euro USD. But anyways, that's looking pretty good now. What do you think? So let's look at it from slightly different points of view here. Oh yeah, here we are, New York yesterday, and we're planning the pullback. Okay, we got the pullback now. Nice. Do you think it's a coincidence that this is the weekly central pivot point at 44? You think it's that's our bottom? It's a 618 weekly central, and the whole thing's a coincidence that that's where it took off? Thank you, Paulo. He says he wishes me great success. I appreciate that. Take it, baby. Right? How many people in your life hold you down? Yeah, so if anyone props you up, it's got your back, I'll take it. Yeah, it's an aggressive move, I grant you that, but if you put your if you had entered and just placed a regular old stop loss, it doesn't really matter, does it? How fast it goes when you're profitable. Look at this. We're just crushing it, dude. Crushing it. So I still got some on the pound yen. I think this account has one on the beast. So darling, don't refrain. Okay. Ba, 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 ba. You can see it's just a breakout trade. It broke out, it pulled back, long and gone. Stopped just below the previous candle. Nice. The best trade here would be to buy it off that 21. But anyways, that's long and gone and been paid for, and the money's already been spent. Yeah, so let's go back. Oh, look at this. We're just crushing it. Love it. Love making huge huge pips, right? Cool. So that's that. That's long gone. That's what we talked about yesterday. That's why it's uninteresting now, right? Who cares? But we did talk about it for a very long time yesterday. Probably the focus of the whole entire day, right? Okay. Gold? Let's do gold. And then we'll do oil. So what's going on gold? Do you want to talk just the basic fundamentals? Why did gold bottom out? Why is gold up 20% this year? Okay, thank you, Nick. Negative interest rates, right, Robbie? No, not safety. Safety. Safety from what? I like when people say that. Well, there might be a meteorite. Yeah, safety. All right, when the world's dead, when everyone on the planet's dead, your corpse will have a huge pile of gold, right? Yeah, the Germans, yeah. Yeah, thank you. No, yeah, no, I know, James. You're right, Jimmy. No, but no. Okay, so I mean, I suppose. Okay, I'll give it back. Okay, I'll suppose. But it was sort of, what was the difference between last year and this year? Okay, kind of thing, right? Last year, people had their money in cash. It was earning almost zero, right? We call that ZIRP, zero interest rate policy. But gold has some carrying costs and all that kind of stuff, right? So even if you're earning, like in the United States, 0.25, it's better than nothing. I mean, it's almost nothing, but it's not nothing. And then even if it was zero, completely ZIRP, zero interest rate policy, that, well, at least it's not costing you anything. Okay? But all of a sudden, if there's negative interest rates, then you're like, well, I'll just buy gold. And that's kind of it. And I think if you look back at this area here, this is probably is it Japan that goes first, and then what is this, euro? Because these are dailies, right? So this is like Japan, NERP, negative interest rates. And then this is European NERP. So we went from ZERP to NERP. Okay? Okay? So that's just kind of interesting, right? So to propel gold up, you have to make bonds even, you know, you have to make cash even less attractive. Okay? Here's some of these little trade plans. Beautiful, huh? Look at this. Zip, zip, zip. You got to go really on a small time frame to catch some of those. I just did a boom. Boom, boom, boom. Oh, that's not too bad. This is guesswork before it actually happened. That's not too bad, sonny boy. Thank you, price action. Look at that. Breakout, pullback, breakout, pullback, breakout. Wow, very nice. And then on a higher level, this should act as support. And it still did, yeah. So we're still kind of here. How cool is that? So anyways, that's what you do. If you're a bull, you keep buying until it stops going up, and then you take profit. Okay, got to get out of that pound yen. Ba-ba-ba-ba. Get out of the pound yen, take your money and run. All right, cool. How about oil? Do you remember we had this one all set up? Hey, we got there. Cool, very good, very nice, guys. High five. High five. Boom. As they say in Turkey, Şerefe. Yeah, I'll drink to that. So yeah, up to 49 bucks, huh? Right into our zone. So 50 bucks might be a problem is all I'm thinking. Yeah, Peter says oil's going to collapse soon. Yeah, what'll happen is the fires hopefully eventually will stop in Fort McMurray. As you know, you probably have heard Suncor, largest energy company in Canada, having to evacuate more of its executives that stayed up there and other employees. My cousin is a senior executive at that firm. He was born and raised in Fort McMurray. And his father had been there since the beginning of time. When Fort McMurray was discovered, my uncle was standing there and says, "There's oil in these here forests," right? And they're like, wow, okay. So, yeah, so I've had family in Fort McMurray before you even heard of Fort McMurray. Pretty amazing stuff. So once that's over, people will say, okay, it could have been a lot worse, hopefully. Right? But usually what happens is the media and the concern is 10 times worse than the reality. Now, we know the fires up there are horrific. But let's say the fire burns all the trees around the tar sands and then dies out. Seems to me you could be in there 2 days later, right? The only problem is if oil's $60 a barrel coming out of Fort McMurray, how aggressive do these firms want to go in and rebuild? So let's say there is massive devastation at a site and $1 billion worth of infrastructure is ruined. When you're 50% away from break even, how aggressive do you want to drop a couple of billion? You know what I mean? So, yeah, probably. So, whatever. But that's not all oil, all Canadian oil, though. Okay, Ed? Canadian oil comes from other places than Fort McMurray. There are places in Canada that produce oil at like $5 a barrel, and the barrel probably costs $2. So that's the thing with Saudi Arabia. Saudi Arabia's oil is really easy to get to. Some of it is quite good. You know, you can't drill through sand dunes, but what you do is if in between the sand dunes you get these salt flats. So you drill through the salt. You don't have to go very deep. There it is. There's the oil. You suck it up, pump it out. No problems. And you know, once the infrastructure is built, the cost is really, really, really low. And you know, the cost to pull it out of the ground is very consistent and very stable. And it could be like it could be 30 cents, like no joke. It could be 30 cents to suck it out of the ground. Now it still needs to be refined into whatever product you want to buy, whether it's jet fuel, car fuel, tar for roads, you know, petroleum for makeup, petroleum for plastics, petroleum for fertilizer. I mean, all this stuff's made from oil, right? That's what refineries do. But the cost of sucking it out of the ground before sticking it into a pipe to transfer it to a port, and then the port's got to put it on a ship, and then the ship has got to move it somewhere. But just the cost of sucking it out of the ground might be 30 cents. Amazing, huh? So you're like, yeah, but I only get $40 for it. I only get $48.98 for this 30 cent product. You're like, well, you know what? I'd be like Iran too, huh? Let's say Iran's costs are a little higher. Maybe it costs them, you know, $15 a barrel. Yeah, but $50, I'd pump as much as I could too. By the way, do you remember a couple of weeks ago I predicted that Venezuela was going to default on their debt? There'd be rioting in the streets, and they're going to kick out their government, get rid of nationalization, and privatize the whole thing, and bring in foreign direct investment. Did you hear that there's riots in the street, Crocus? I'm like, I had to send my boys in, stir the thing up, because I'm going to buy beachfront property. Remember? Remember that discussion? I also did that in non-farm payrolls on Friday. Boom! Send my boys in there. Mix it up. Yeah. Part of my hedge fund, Catalyst Capital. If you can't trade the news, make the news, right? Yeah. All right. That's Fred says you heard the government wants to take over the factories. Well, the government does run the factories, either directly or indirectly. They're communist socialist pig dogs. Or something close to it, anyways. Now, the Venezuelan people, I'm sure, are very nice people. But when you have an entire society living off the rents of oil, what I don't understand is, like, no matter how you want to run your country, so let's say that's what you want to do. Now, remember, the Russians were in there for a very long time. Hugo Chavez was in there running the show too. Not necessarily poorly. I mean, who am I to say, right? But you can make whatever choice you want in government. I'm not here to say which one's right and which one's wrong. And, you know, and if you have foreign companies going in and, let's say, pillaging your country, and the average person doesn't feel like they're getting their fair share, then of course they're going to rebel and nationalize the whole thing. Why wouldn't you? You're like, these guys are taking all our money. We're going to do it ourselves and keep the money ourselves, right? But then when you keep the money yourself and then spend more money than you make and then never reinvest into the infrastructure, like, that's the mentality I don't understand. You say, look, we got this infrastructure here. It's worth billions of dollars and it produces tens of billions of dollars of revenue every year. All we need to do is keep this infrastructure running and none of us have to work the rest of our lives. As long as we don't overspend, and if we take, I don't know, 20 or 30% of the revenue and reinvest it back into our industry, then we can all just siesta all day and just hang out on the beach and just live glorious lives. All we have to do is reinvest into our cash cow. Like, how come you don't, I don't know. I don't get that. I just really don't understand how you can have something that produces billions and billions and billions and billions and billions and billions of dollars every year. If oil prices go up, you make double. But you don't have to work any harder, right? It's just glorious. Just don't overspend. Norway can do it without any problems. Why can't Venezuela? That's the problems I have with it. I'm like, well, what's wrong with Venezuelans? So I'm going to blame the Russians. Russians were in there. The Cubans and the Russians. Okay? That's what it was. It's the Cubans and the Russians. We know Cuba and Russia's doing well. All right. So, so maybe once we get up to 50 bucks, maybe she comes around. It is a key psych level, don't you think? And then you can compare this to Brent as well if you want. What glorious moves though, huh? You see it, double bottom, higher high, higher low. Just glorious, right? Higher high, higher low, higher high, higher low, higher high. Just, that's the kind of stuff that puts your kids through college. Ivy League, baby. Right? Isn't that nice? Tyler sent me an email yesterday thanking me about the idea of ridiculous, sickening work ethic. That was really cool of him. He said, there's a concept of, working hard. And he says, I'm a hard worker, which he is. But then he said, but this idea of ridiculous, sickening work ethic inspired him for greatness. And I'm like, that's the whole point, right? So in honor of ridiculous, sickening work ethic, I've been tossing and turning because school stopped last week. And here it is. It hasn't even been 1 week. And I'm waiting for next month to start because I'm taking summer school at Harvard. And I have this whole 4 or 5 week window where I only have to raise children and do this and do that and trade and do all the other side things that I do and a million things going on. But I'm like, so that's hard work, but I need one more level of stress. So I just was accepted into a course run by the International Monetary Fund. I'm going to see if I can bust that out. It's only 100 hours, so I'm going to try to do that this month. Well, I'm not in school, so I'm going to be in school when I'm not in school. Pretty interesting. It's on macroeconomic forecasting and modeling. I thought, I like me doing that. So I'd like to thank Tyler for motivating me to not just be a hard worker, but to continue to be ridiculous. My wife thinks I'm stupid. In a good way, of course. Luckily for me, there are stupider people than me. All right. So, yeah, so hopefully by June, by the time I start my Harvard classes, um, hopefully I'll have a certificate in financial modeling from the International Monetary Fund. Huh, that can't be bad. All right, so here we are. Kind of looks like a head and shoulders, yo. Isn't this nice? Now, it seems to me I drew this area here before we made this rally up. I think that's neato. Okay, so now we kind of got this going on, right? Okay, and just to remind you, and I guess I should have my drawing tool going. Let me fire that up. To remind you, there were two options on this. Not optional, opportunities, up at that. Two trade plans. Do you need some time on your own? Okay, the first option was this one, head and shoulders down, right? And then the second option was this one. You see the blue? Because we did that last week. Was to sell it off the double top, right? By the way, George Soros has a 50% larger hedge than he has longs on the U.S. stock market. So, let's say he's long $1 billion. He's also short $1.5 billion. Now, it's probably long 10 billion, short 15 billion. But nonetheless, he wants to make some money on the downside, and then most likely he's going to pick it up on the upside. But okay, so hopefully you guys remember this, doing this. I like how it came up and snap off the top. I wasn't right on the first one. I wasn't wrong on the second one. It was like right in the middle, right? But nonetheless, do you think it had to do with this left shoulder? It's pretty close. Like there wasn't much time that it spent above that, right? So let's talk about this. Let's talk about pips, baby. Let's talk about you and me. Okay. First thing you need to do is find your neckline. How does this feel? Does that feel all right to you for a neckline? Okay. Second thing is you got to find the tip of the crown, because depending on how the neck forms, you can call it a crown pattern versus a head and shoulders. It's all the same, baby. Don't worry about it. Okay. You got to measure that distance there. And then you go to your neckline and you predict the target from that. So let's do that this way. We'll call it 80. Okay. 800. Well, let me do it here. So the neckline was what? About here? Okay, let's do it this way. And then I'll measure. Boom, 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 boom. La 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 la. Oh, pretty close, Wayne. Good call. Right there. 1960. Oh, it tells me here. How nice. It was a little less, right? So there you go. There's the target, baby. Okay, and of course, does it have to be this? No, it's that zone. So now what you do is you look at other levels of support and resistance, and you look at pivot points and psych levels and all that kind of stuff. So like, what if it only comes to this gray area? Well, yeah, that's good enough. That's fine. Okay. But that's how you would work your pattern. Okay. Yeah, well, yeah, you could look at it as basically kicking off of this zone, right? That'll do too. That'll do, big. That'll do. So here's how you make your money. You decide what you want to do now. Do you want to short sell this down and then buy it on look for bounces on these gray zones? Yeah, that would be what a trader does. An investor would just buy these dips. Okay. George Soros is playing it off the top. Why? Because it's obviously, clearly, without a shadow of a doubt, resistance. And if you remember, when we were coming up this move, I pointed out that this is the resistance zone, right? That we have now. And sure enough, we held. It held. So, like, yeah. So George Soros is, short billions of dollars on this one. Well, yeah, isn't that what you're supposed to be? Whether it's billions or, mini lots, what's the difference? Okay, right? What else are you supposed to do? So this will be interesting, and maybe maybe the fall will turn this around. Maybe more Chinese money flowing out of the U.S. Maybe more money moving out of Europe. I don't know. Maybe a Brexit or something. All kinds of things could push this up, right? But do you sell in May and go away, or do you buy in May and go away? Yeah. Well, what month is it now? Oh, snap. It's May now. Well, what do you know? Right? Busan says, Wayne, can you talk about Aussie? Maybe at the end of the year we could be starting the long. I would think before then. I'd start considering it around August. It'll probably look terribly negative in August. So you'd be the first one, right? But maybe by January, you're probably late, right? So what you should be doing over the next few months is just keep identifying the levels in which you'd like to buy. Is it going to go all the way down to 60? Well, 60 meaning like 70, 0, 0, 0, 0, the 60s? Yeah, I don't think so. No, I don't think so. So wouldn't it be interesting if it fell to 75 and then you start buying it up, maybe? But that's where your analysis comes in, right? Just I'm looking at Aussie yen, but you're talking Aussie dollar. See, I wouldn't trade. I don't know if you're talking Aussie, but I don't think I'd trade Aussie dollar that way. Okay. So one thing you could work on here is identify the trend or the correlation of the U.S. stock market versus the thing that you like to trade a lot. Well, see, I'm still bullish on the U.S. dollar. Whether we raise 1, 2, 3, or 4 times per year, that's still a hell of a lot more than everybody else. So on the long term, I'm still long USD. And right now, Australia has recently cut interest rates and has the potential to cut more if they want. So no matter how you look at it, I wouldn't I wouldn't buy pound dollar. Sorry, Aussie dollar. Okay, and right now Japanese yen is hugely strong. But and no matter how you look at the daily chart on the Aussie yen, it's bearish. But you can say, "Oh, but Wayne, but." I'm not going to want to hear it. No matter what you say, the daily is bearish. But if you're a bull, you what? Buy dips on the 4 hour? Sure, why not? Jam your stop, and maybe you don't get knocked out. Maybe you're hugely lucky on the daily. It can happen, but good luck with that, huh? So just what you do is you tiptoe into it and take no risk. Meaning you buy it when the 4 hour looks like it's going to go up. So what is that? Twice a week? So you buy nice dips after highs. So you buy higher lows at support when it's oversold. 15-minute gives you a cycle around. You drop a lot, pop a stop, take a walk. A few hours later, you move your stop to break even, and you let that run for 2 or 3 days. Maybe you lock in a few pips and never get out. Maybe you don't get knocked out. Maybe you get lucky. It can happen. It does happen from time to time. Okay. We hit the psych level. Or no, that's midpoint. Okay. There's the target. Do you remember Monday? M2, target, M4. Classic pivots, huh? Classic. Easy peasy lemon squeezy. Now, some of you, I believe, are working on making trades on Monday and Tuesday and holding till Thursday or Friday. Is that right? How many people are working on their swing trading? Cool. Well, then keep trying. Are you using pivot point, Shuggy? Sugi? Okay, and you're buying at you're buying at M2 and selling at M3? Well, why do you even touch your stop? Thought you had a plan. Yeah. Just make a rule. You're not allowed to touch your stop for at least 24 hours. Miles says his stops are too close, get kicked out, and then move. All right, how about use 300 pip stops? It'll solve that problem. It would. Wouldn't be a problem anymore. All right, I'm just kind of looking around. What do we want to do? Where do we want to go? You know, one battle going on is Kiwi Yen. Lucas, not if you cut your lot size. No, you cut your lot size. There's no huge losses. Okay? No. Well, how about this way? If you keep moving your stop too quickly and knocking yourself out either for losses or even worse, knocking yourself out of winning trades, right? Then what you're doing isn't working. So now you say, oh, well, I won't win enough if my lot sizes are small. Well, again, what you're doing is not working. So why don't you change your behavior and measure the results and then adjust? So what if, how about this? What if 50% of your trades are losers even with huge stops? Then you have a strategy problem, not a stop problem. Okay? So if you have a 300 pip stop and 80% of your trades are winners, awesome, dude. Then reduce it to 200. See if it changes anything. Do that 100 times. Move it to 100. Now your lot size is triple what it used to be, and let's see if you can maintain 80% winners. I mean, just use scientific methodology, right? Fix that. Or keep having your stop too close and let me know how it goes. Okay? Remember, your goal is to be an amazing trader 3 years from now. Don't even worry about today. You say, I got to get this fixed. So the next 100 trades, I'm going to make some serious, right? Yeah, it does, Miles. You're right. But that's why you got a 3-year plan, right? Well, Martin says, 1-to-1 is okay with 80% winners. Yeah, but I don't necessarily recommend 1-to-1 either. You know, and sometimes, let's say in the second half of the year, very often, I'm a big fan of not having limits at all. I like unlimited profits. So there are times when I might be doing 5,500 OCOs, 10-to-1, right? Why the second half of the year? Seasonality. I don't care about what the take profit is. You told me you have a problem because you're moving your stop too quickly. Okay, I just solved that problem. Okay. Now, if your trade makes a lower low and you're long, you don't have to take the 300 pip loss. Just don't make your stop your problem. Let your trade fail and then take your loss. But don't jam your stop, like, right? Because remember, amateurs are afraid of losing money. So inevitably they screw up their good trades, right? And never, ever give themselves to win. They have a lot of stupid trades. Now, if you've been around a year or two, that's fine. Right? Because what happens is you don't make dumb trades anymore, hopefully, but you probably have drawdowns. But the thing is, a professional's not worried about losing money, right? Their concerns are, when do I take profit and all that kind of stuff. So if you're going to take a loss, be damn sure the trade failed, not because you were afraid. Oh no! Right? Or how about this? How about this one? Here's a classic amateur move. I'm going to jam my stop at +1. It's just like Clueless Street, right? Just wow. Not only are you poor at trading, you also don't understand statistics, right? So you're guaranteeing yourself failure. It's just amazing, right? Right. Well, John, you need to know why it failed, right? By allowing it to fail. But what if it never even failed? What if you just bailed early because you were afraid? Then you can't go back and figure out what went wrong. So you're living your whole life in fear. Right? And jamming your stop at +1 implies that you're already profitable. So what you're doing, again, out of fear, is hoping that you don't take a loss, locking in the smallest profit you possibly can, which means you're probably doing it quickly if you're basing it on fear, which means your average winner is going to be small because you're going to get knocked out on the volatility. And I know that because you're afraid. So your winners are always going to be tiny. And they're probably not even going to be your percentages are probably not good. Again, because you make decisions on fear, right? And then what about your losses? Well, if you're so concerned about not having a loss when you're a winner, you're probably 10 times worse when it's a loser, and you probably hold your losers, right? So I would say let it fail. So let's say I wanted to buy at support here. I bought in here. Why? Because I'm at clear support. I got the psych level, whatever. Not a hard trade, right? Okay, so it's done this, it's done this, it's done this. This is good. And my stop's down here. Happens. All right, take the loss. Move on. What's your problem? What's the big deal, right? Did you buy it support? Did you buy it when it was oversold? Did you buy it on a lower time frame signal? Yeah. Okay, good. You did your job. You considered it a range trade. That's fine. Great. Notice your next trade should be short on the breakout retracement. Most people don't get this trade after they take the loss, right? Oh, I lost my confidence, right? Well, dude, just look at it. Did you buy it at support? Yes. Were you bullish on this? Yes. Right or wrong, it doesn't even matter, just as long as you were. Did it fail? Yeah, it broke below support, knocked me out. Then it retraced, and I got the roll reversal. Sell here, right? Oh, come on, tool. Sell here, right? On the breakout. It's just a breakout trade now. So you have a range trade where you buy at support, and your target's resistance. Hope its support broke. Good. Trade the roll reversal, and it should go down. To stay calm and focused, right? You can't control the cards. You got to play your hand statistically, right? Well, on this particular one, I can see that someone's going to try to buy support. Remember, the recommendation was that in here, right? And we had it set up days in advance. And if things go well, it'll go up. The problem is your outlook for New Zealand dollar should be bearish. Okay? But if you are still long-term bull and you believe the yen is going to weaken and you like the high yield on the Kiwi, all right, then catch a proper trade, okay? Put a stop on it, let her go. Now, if this makes a higher high, you have permission to move your stop from here to here and no more. But not until you're up here at a higher high. Okay? But even then, that even might be too quick. Michael says, so stay bearish. Well, do you sell at support? No. Do you know if it's going to drop down here or not? No. Do you like the high yield? Do you like the yen weakening? If the answer to that is yes, maybe, then wait for the support to be hit. Wait for the support to be respected, right? A la higher high versus this old area. Buy the dip. It's called a 1, 2, 3. You're long in here. Stop is below the lower low. And hope it slingshots. And if you get this right, at the bare minimum, your target's up here. Bare minimum 500 pips. Now, knowing this time of year, I believe the pattern will fail and you'll probably get it here. So you'll only make, 2 to 250 pips. Okay, that's fine, right? The question is, can you play this area properly? And along the way, can you reduce risk? But the thing is, there's only one way you can lose money on this. If it completely fails. Well, that's how you want to be wrong. Not a timing issue, not a volatility issue. You're like, yeah, man, that was a good trade. Oh, but, the volatility, the news thing knocked me out. What you don't want is to get knocked out on volatility and then it takes off and produces the move. You took the risk and got no reward. In fact, you took the risk and took the loss, but you were completely right. Well, then that means you screwed up your trade, doesn't it? How can you be right and lose money? So I'd rather you be wrong and lose money than be right and lose money. So cut your lot size, increase your stop, trade the pattern, have the plan. Trade the plan and get out when your plan is wrong, not because you were scared. Hua? Hoorah! Okay. Can I talk about more about seasonality? How about some other day? How about tomorrow? Tomorrow. James says if you don't move the stop and then get taken out, then you take the loss. Yeah. That's right. You took the loss because you were wrong. But you're already on other trades, right? No, it can't be the right idea per se. I mean, yes, look, like I said, have a trade plan. That is a valid trade plan. It may not happen, but it's a valid trade plan. It's technically correct, fundamentally flawed. Well, it happens. What are you going to be, 100% right? But I want you to be wrong when you lose money. Not afraid. Think of it. You might be leaving 30% of your trades might be winners, and you're leaving them on the table, either break even. Oh, I'm sorry, you're plus one. Right? You might have a huge winning percentage and make no money. So who cares? Right? 60% of the time, I win every time. Right? It's just whatever. I've seen, by the way, I've seen tons of traders that are 80 and 90% profitable and make no money. Show me all your profitable trades. Plus 3, plus 5, plus 8, plus 9, blah, 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 minus 142. See the 1 out of 10 that's a loser is 10 times bigger than the 9 winners. I mean, like, no joke. 90% winners live under a bridge with your mom. Yeah, and your mom's homeless, right? Your mom's on welfare. To quote Eddie Murphy, right? I live in a van down by the river. Mm-hmm. But I'm 90% winning Forex trader. Mm-hmm. You make my day, Artem, so thanks for being here every day. Yeah, Stefan is right. If you have 90% winners, you're not only going to bankrupt yourself, you're going to bankrupt all your clients. But anyways, hey man, peace on earth. May the pips be with you. May your profits be above average. I love you, babe. I like being here every day with you. You're my sweet baby. So I'll see you tomorrow. Does that sound good? I'll be here tomorrow. And keep using the site, guys. Keep using the site. Okay? Keep using the site. Let's figure out what works, what doesn't work. Let's tweak it. Let's make it ours. Let's make it a huge success. So take care. I'll see you tomorrow and the next day and all that kind of stuff. Cheers.